What are the benefits of taxing my beauty salon as an S-Corp?
So there were a ton of S corporation questions. That's why you're kind of seeing a small theme here. Lots of benefits. You know, the accountable plan reimbursements is a big one. That would be typically anything that you pay out of pocket on behalf of the corporation with your own funds. It's for a reasonable cell phone. That's one of them, certainly.
Equipment,
internet,
accountable office, like your home.
Yep.
Hey,
Office.
you're using my home as an office.
Mm-hmm.
The place is getting a bedroom of its own.
Yep.
You can write off like the percentage of the use of the home under many different theories. You could be using net square footage. You could be using the room methodology. You could be using gross square foot, whatever's in your best interest. You could choose when you have an accountable plan. Keep going. Sorry.
Yeah, actually, I used to get my haircut. A lady who had it in her basement. So there are lots of write-offs potential there. Corporate meetings. Also an S corporation, you know, if you, let's say you had $100 of income, it would ordinarily, there's two ways of basically getting paid besides the reimbursements. A reasonable wage, which we talked about way back in the beginning of the show, and then basically what we call the distribution. That's anything else. So that $100 reasonable wage we got to pay, maybe that's $30. The key about the other 70, that amount you take out, it's not subject to employment taxes. That's 15.3%. So whereas if it was a C Corp and you did all $100 as a W-2, you're going to get iced with the 15.3 between the corp and the employee. So S corporation has a lot of benefits.
Yeah, and I'm going to hit on a couple that are unusual, which is number one, if you are taxed as an S Corp, your audit rate drops by about 800% versus its same circumstances. So let's say you're a sole proprietor and you're making $100,000 net as your beauty salon. Your audit rate is what, 1.4% versus 0.025, like it's a fraction of a 0.25%. So it's thousands and thousands of percent higher likelihood to get audited, and they lose their audits 94 to 95% of the time statistically. And when I say they, sole proprietors. If we make that same $100,000 in an S Corp, there's going to be things that we get to write off that we don't get to write off as a sole proprietor. The most obvious is when you're a sole proprietor, you can only write off your business use of your technology, and you have to track it. You only get to write off the business use of your car, the business use of your computer, the business use of your home is the home office, which is $5 a square foot in a safe harbor. Mm-hmm. Like they have a lot of restrictions. In S Corp, you eliminate those restrictions. Mm-hmm. For the most part. I'm able to say, am I using this for the benefit of the employer? If it is, I reimburse the whole amount. For me and anybody else that's working in my family for the company. If I have a computer, reimburse the whole amount. If I have an administrative office in my home and it's got a TV in there, or, you know, so let's say that it's the case with of your situation where you're going into somebody's home mm-hmm. and they have the salon there, you're writing off, let's say it's 20%. Let's say that you have a 3-bedroom home, 3-bedroom, 2-bath, and you got 2 big areas. You have your kitchen area and then you have a living room. I would count that as 5 rooms. So one of those five is 20%. I would write off 20% of your property taxes. I'd write off 20% of your mortgage. I'd write off 20% of the insurance, 20% of the what?
The outdoor areas, because you have foot traffic coming in.
People coming in, you get to do landscaping. If I have a cleaner, it's 20% of that. I even get to depreciate the home. I get 20% of what it would have been on depreciation. The IRS gives us a schedule there. So I've done the math on this a number of times. It's about 10 times more of a deduction. So if you would have written off $500 as a sole proprietor, you're going to write off $5,000 as an S or a C Corp, probably an S Corp in this case, because you can do an accountable plan. Because it's an accountable plan, you can also get an extra $5,000 to $1,000 a month deduction by having your corporate meetings in that home. Now, can it be by yourself? No, I would not do that. But what I would do is find other folks in your industry, maybe do continuing education. Maybe you come over and watch a Tax Tuesday once a month, right? And you're all learning and you're saying this is our continuing education, or maybe you're doing classes, or maybe you're doing meeting, talking about marketing, whatever the case, you can reimburse yourself the fair market value of what that accommodation would have cost in your market. So what we suggest is that you price out 3 hotels where you could get a meeting room that's of equivalent size to wherever you're going to have your meeting. Maybe it's going to be your kitchen area. Maybe it's going to be your living room. Maybe you're going to use a TV. Maybe you're going to have refreshments, and get an equal pricing. We've been doing this a lot. We've defended this twice in the last 23, 24 years under audit, won both times, because it's very, very clear. This is called 288. You can reimburse yourself that value for your house, or you rent it to, technically you're renting it to the corp and it's paying you, but you don't have to recognize it as income if it's 14 days or less. So 14 days or less, you do that. So once a month you do it, you're fine. You get to have that money tax-free and it's deductible to the company. So let's just say that's an extra $6,000 a year. So that S-Corp all of a sudden starts lowering our tax. And then, as Elliot said very well, S-corporations, you only pay employment taxes on the amount of wage you take, which is generally about a third of the profit. So if we had a sole proprietorship and they made $100,000, your tax after a small deduction for half of the payment is $14,100 for employment taxes alone. That's old age, disability, and survivors of Medicare. So it's $14,100 plus your federal taxes plus your state if you're a sole proprietor. Now let's go to the S-Corp. S-Corporation, it's not $100,000 anymore because we just wrote off a bunch more stuff. Let's say it's $80,000. Now let's say that you paid yourself $25,000 as a salary. You could defer that whole amount, by the way, into a 401k. But let's just say that you paid yourself that money. You're going to pay employment taxes. You pay half, the company pays half. So ultimately it's the same thing. It's 14.1% when you do the math. So you're going to pay, I should do this, 14.1 times, let's say that it was, what did I say? It was 25,000 times 0.141. So $3,525 versus $14,100. Because once you pay that, you're done. All the profit, you could take that profit out, or you could leave it in there. Doesn't matter. It's going to come down. It's not going to be subject to employment taxes, whether you take it out or leave it in there. So you just saved yourself $11,000 just by making that one S election. Now, here's the thing. What people don't realize. And so if you are a sole proprietor right now and you're going, crap, but you're an LLC, we can make a late election for this year. So even for 2023, it's not too late. We can make a late election and treat you as an S-Corp, but we need to do a payroll before the end of the year. And it could save, I just did one of these today. It saved the guy $9,000. So I was like, cool. And his accountant, like, because sometimes we're doing the taxes, not everybody. And the accountant was like, whoa, you can do that? And it's like, yes, there's a revenue procedure that allows us to do it. It has to be an LLC, and we make a late S election. I think we're doing the 2553 with a late rev proc across the top. You get it almost automatically. Boom. Tax in your pocket. Plus you get all those other, like it's going to save you a ton of money. Every time I hear an accountant go, hey, but it's more complicated. Yeah, most things that pay you a bunch of money tend to have a little bit of complexity to them, but it's not rocket science. This is actually really easy stuff. Any good accountant's going to know how to do it. Or if they don't do business, they will learn how to do it in about 10 minutes. It's not hard. It actually really makes sense. That's why you talk to people when you're setting up your business that do business. Like, don't talk to the guy that's down in the corner doing a bunch of individual returns, or don't do the chain prepares. They're horrendous. Just like their accuracy rate, they've done studies.
Yeah, that's awful.
Treasury Inspector General did a study on their accuracy rate on small businesses. Do you want to know what it was?
Oh, it's under 10%. Yeah.
It was 0% for the chain preparers. For small accountants, it was 4%. That was their accuracy rate. It was horrific because nobody learns how to do it. You learn it by doing it. So you better learn, like, you better work with people that do it all day long, that have that niche, and then you get to save yourself a bunch of money. But yeah, you want to be that S, or you want to be a C, depending on your situation. And for a beauty salon, you got all those expenses. I know that the Dyson, I know
You have
all
a
these
hair
people-
dryer?
yeah, it's like $500.
They're quiet though. They're so quiet.
I'm going to do that. And the curlers that Elliot uses are really expensive. Right.
But-
So
I think to sum it up, there are a few benefits. Is that what we're saying?
There's a few benefits.
If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.